Maverick traders, welcome out to your market roundup June 3rd. Corey here with you. Let's jump into it. So we like to take a look at meaningful news in the markets, what could be impactful, kind of dissect what's happening, and then take that to a top-down approach. We look at the S&P, we look at the NASDAQ, we look at where setups are materializing as we go through those sectors, and then we'll highlight a few different trade ideas. They can be bullish, sideways, or bearish.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we take a look at markets, really the story of today was all about oil. Equities really didn't move much. I saw a headline that the Dow moved down 100 and some odd points, and it's laughable. That's less than, it's 0.3%. So they tried to make a headline out of it, but really equities didn't move much. Oil down 4%. Gold up nearly 1%, but oil was the big story today, the big mover, and it dragged down the energy sector. You're going to see that as we look at the heat map. In the daily news, GameStop spiked again. This roaring kitty character, whenever he tweets and gets the markets excited, you have a short covering rally. However, we are getting compressing volatility, meaning you're probably creating a series of lower swing highs, and each subsequent spike becomes less meaningful and less impactful and goes to lower levels than the prior spikes, and that seems to be the case. Microsoft confirms layoffs in mixed reality. So going to advanced decline line, 50% of stocks down, 47% up. It was just a flat day. 50-period moving average remains better, not worse. 57% of stocks above their 50-period moving average. So as we look at the S&P, there's this all-important 5260 level, and Rob has been harping on this, and that 5260 level, if you just sort of drag a line over, you can see we had a little fake move below, kind of a shakeout, if you will, and we popped back above. Markets are still in pretty good shape. I mean, upward sloping moving averages, bullish, and so forth. A consolidation here after the run that the markets have been on is not a problem. Pullbacks are meant to kind of shake people out. The question is really this level. And what you don't want to see is a lower swing high. You do not want to see this market melt down again below that level. That will tell us it is broken. Not uncommon. I often teach support and resistance is like a trampoline. When you land on a trampoline, it gives and then it springs you. And so it's very common for stocks to come and squish into support and then bounce. And the reason for that is really the dynamics of as you push below support, it can kind of trigger some stop losses, shake some people out, and then it goes. So it's more of a squishy support and resistance zone. That's how I like to teach it. That's how I like to use it. And this being a prime example, it's not a rock hard surface and you go below it for a day or something and it's all hell breaks loose. No, that's not usually how it works. It's sort of a springboard, a little bit more of a trampoline. The NASDAQ, we did not have confirmation of any sort of breakdown in the NASDAQ because although it wicked below, it never even closed below the prior highs. Again, kind of that push below and then springs us back up. So markets look to be in pretty good shape. If you're just looking at this technically, take your opinion away, take your bias and so forth. If you're just looking at this on a purely technical basis, the 20 has recently crossed the 50. This is our first pullback really of any substance following that crossover. That's usually a good buying opportunity, and markets look like they want to go higher. Again, as long as we don't pivot over and really make a lower swing high, markets are in pretty good shape. So as we look at the heat map, look at the bright red in energy with oil down big Energy got hammered. Healthcare, I would say more in the green, more red than green overall on this, but energy was really hammered to the downside today. So outlook is still more bullish than not. I mean, we're still in this upward trending environment. Nothing much to add there. Above the 20, above the 50, above the 200, and so forth. Now, if we look at potential candidates, going right back to healthcare, which was more in the green on the bullish side. On the bearish side, kind of a mixed picture, but I have an interesting one there in terms of a gold miner. So, first, a healthcare name. This is Biogen. This is a biotech, a big deep pullback, but held at the 50 period moving average and pushing higher. You may see a little cup and handle type of dynamics, something along those lines. But ultimately, this thing looks like it wants to trade higher. I would anticipate the 235, 240, 245. It's all coming in sequence and probably coming sooner rather than later. On the bearish side, FedEx, UPS, some of these just cannot get out of their own way. Classic downtrend in an upward moving market, relative weakness, and the transportation index has just been weak as compared to the market. So weak sector, weak stock, everything relative weakness compared to most things out there, and certainly to the S&P overall. Another possible candidate now. Gold is interesting because gold, if you look at it, it has this same type of pattern where it has two lows and we're dangerously close to breaking the bottom. And if we do that, I think gold miners get hurt, but you want to go after the weakest players. You want to go after the weaklings. And most gold mining stocks are in an uptrend, but not GFI. GFI, Goldfields, down here at the lows and probably going to lead this charge to the downside. So it seems to be that there's some rotation out of precious metals, and the confirmation of this will be both a breakdown in gold spot price and GFI as we take out these support levels. uh, Away we go to the downside, it would appear. Now, as we look at markets, as long as we hold above that 5260 and can maintain there, not create a lower swing high and plunge back below, we're in healthy shape and we may be on target for more upside. Payrolls out on Friday. Our earnings this week, pretty light on earnings. Most have passed, but we've got CrowdStrike, DocuSign, Dollar Tree, Lululemon, and a few others. But those are the big names. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.